Hey viewers, welcome to Digital Learning, where we post educational content on crypto and digital marketing. If you're new to the channel, hit the like button and subscribe so you never miss any informative updates. Crypto scams are leveling up. Even expert developers are falling victim. Today's story, an Ethereum core developer had his hot wallet drained by a malicious AI-powered plugin. Let's break down what happened and how you can protect your crypto. Ethereum core developer Zach Cole shared that his hot wallet was compromised by a malicious AI extension designed for Cursor AI, a coding assistant. He installed what looked like a legit Solidity plugin called contractshark.solidity-lang, but it secretly read his .env file and exfiltrated his private key. The attacker had access for 3 full days before draining funds. Despite his experience, Cole lost a small amount, just a few $100s, because he wisely used a segregated testing wallet. But this incident is still a wake-up call. This incident is critical for one simple reason. If a core Ethereum developer can be tricked, so can novices. Attackers are using AI and polished social engineering to craft malware that's increasingly hard to detect. These aren't random errors, they're becoming mainstream threats. Wallet drainers, malicious tools that empty your funds, are on the rise. In 2024 alone, over $494 million was stolen via such attacks, marking a 67% increase year over year. Scammers are selling ready-made drainer-as-a-service kits, complete with phishing tools and scripts. With AI-generated attacks now in play, the risk is skyrocketing. Here is how you can protect yourself from such malicious attacks. Only install trusted extensions from official sources. Double-check permissions. If an extension wants to read all data, stop immediately. Use hardware wallets or cold storage for your main holdings. Isolate hot wallets used for testing. Stay informed. Join crypto security communities and regularly update yourself. BTC and Ethereum hold their ground. Ethereum breaks $10 billion TVL, and pudgy penguins hit the F1 track. Despite some profit-taking visible in falling futures open interest, both Bitcoin and Ethereum continue to hold on to gains, showing resilience in a choppy market. The DeFi protocol Ethereum has officially crossed the $10 billion total value locked TVL mark, now sitting at $11.9 billion. This takeover cements Ethereum's dominance in the yield-based stablecoin space. The quirky NFT project Pudgy Penguins is racing into the mainstream, sponsoring a Formula One event in Singapore and gaining serious brand exposure beyond the crypto world. Bitcoin and Ethereum holding current levels amid a pullback shows underlying strength, especially with institutional accumulation still in play. Ethereum has almost $12 billion locked in its platform, showing it's very popular as a synthetic dollar service. It's doing better than many competitors and is becoming a key player in DeFi. NFT, Pudgy Penguins F1 sponsorship signals NFTs moving into real-world marketing and brand visibility, expanding beyond digital art. Why Standard Chartered just raised Ethereum to $7,500? Standard Chartered just revised its 2025 price target for Ethereum to a bold price, $7,500, up from $4,000 just months ago. Here's the behind the scenes on what's fueling this massive upgrade and what it could mean for your portfolio. In their updated outlook, Standard Chartered cites a few major catalysts. A wave of institutional demand, like ETH treasury firms and ETFs, have bought 3.8% of all circulating ETH since early June, nearly double the pace Bitcoin saw during its last institutional influx. The Genius Act, which provides regulatory clarity for stablecoins, is set to unleash massive on-chain activity, since stablecoins drive 40% of network fees and most are built on Ethereum. Planned Layer 1 upgrades, including a 10 times increase in throughput by Vitalik Buterin, set Ethereum up for long-term scalability. Combined, these shifts are reshaping the ETH growth narrative. This target jump of nearly 80% from current levels reflects renewed bullish sentiment. It means ETH may surpass its previous all-time high by the end of Q3 2025 and could hit $25,000 by the end of 2028, according to the bank's long-term view. Ethereum's dominance in DeFi, tokenization, and stablecoin use could solidify its institutional appeal. As Ethereum strengthens, the forecast suggests the ETH-BTC valuation ratio could climb, indicating Ethereum gaining share over Bitcoin as its fundamentals improve. As ETH plays key roles in finance infrastructure, its value may increasingly reflect real utility and adoption. Can Ethereum ride this institutional wave to 7.5K and beyond? Let me know in the comments. Another major development in OKB coin. OKB just skyrocketed over 160% in a single day. What triggered this monumental bull run? OKX executed a one-time burn of 65.26 million OKB tokens, slashing the supply and fixing it at just 21 million tokens total. This burning strategy cut the token's liquidity by a major margin. Result? A supply shock that drove OKB from about $45 all the way up to $135, a staggering 160% rally. And that's not all. OKX also rolled out a game-changing upgrade to its blockchain, XLayer, with the PP upgrade, powered by Polygon CDK. The system's speed increased to 5,000 transactions per second, a big improvement. Gas fees slashed to near zero. OKB will now be the only token used to pay transaction fees on XLayer. Also, OKT chain is shutting down, and its tokens are being automatically changed into OKB. This isn't just hype, it's a textbook example of supply-side scarcity meeting real utility expansion. The burn creates a bullish catalyst, while XLayer upgrades usher in scalability, blockchain adoption, and real-world asset use cases. It's a powerful combination that traders and investors are rushing towards. With the burn behind it, OKB is now in a new scarcity-driven game. If adoption of XLayer grows, this price run could have real staying power. But be cautious, this was a dramatic surge, and profit-taking could cool things off quickly. What do you think? Will OKB keep blazing trails, or is this a pump and dump in disguise? Let me know down below. US CPI hits 2.7%. The latest US CPI came in lower than expected at 2.7%, and this can be fantastic news for the crypto market. Let's break down why a smaller CPI number could mean bigger upside for digital assets. The CPI, a key measurement of inflation, came in at 2.7%, slightly lower than the expected 2.8%. While it might seem like a small difference, it signals that inflation is still manageable, giving the Fed less reason to raise interest rates aggressively. In periods of high rates, investors often retreat from risk assets like crypto. But with inflation cooling, the Fed may pause or delay rate hikes, leading to a more favorable environment for crypto. Lower interest rates mean cheaper borrowing and more liquidity, both crypto-friendly dynamics. This CPI reading now sets the tone for the next Fed decision. If the trend continues, it may fuel further gains in Bitcoin, Ethereum, and alts. So, will the Fed delay rate cuts and hold crypto back, or is this a dip, a buying opportunity? Let me know regarding your thoughts. Talking about Bitcoin, it must hold above $121,000 to maintain the current bull run momentum. However, if it drops below this level, we could see a short-term bearish phase. As for Ethereum, it's experiencing a brief cool-down in price due to recent developments. To stay on track towards the $5,000 target, it needs to hold above the $4,000 support. And as per reports, institutions are heavily accumulating Ethereum, so the chances are higher that it may continue its bull run. And that's a wrap for today's market update. Remember, knowledge is your best investment, so keep learning, keep questioning, and keep growing. If you found this video valuable, smash that like button, subscribe to Digital Learning, and hit the bell so you're first to catch our next big update. Stay smart, stay profitable, and I'll see you in the next one.